The other aspect that we are going to shift focus to, Mr. Bandyopadhyay, is something that the SEBI has mentioned, and that's on the yellow metal gold. Now, this has been an asset class that has been clearly the top of mind asset class for all retail investors all through last 1.5 years odd, because it has widely outperformed the stock markets and their performance. And even now, the prices have not really climbed down as much as how we would want to see after a huge run-up. Now, the fresh warning that has actually come from the capital markets regulator SEBI is with respect to digital gold. And SEBI has now cautioned investors against digital gold or e-gold that are sold on online platforms, a lot of apps, saying that these products are not regulated by SEBI. Such offerings, SEBI has said, are marketed as alternatives to physical gold. SEBI has clarified that digital gold on platforms does not follow under SEBI's regulatory framework. No investor protection is available for such products, and investors could face counterparty and operational risks there. Now, SEBI has also pointed out to gold ETFs via mutual funds, electronic gold receipts that are tradable on stock exchanges, exchange-traded commodity derivatives linked to gold. These can be bought only through SEBI-registered intermediaries, is what SEBI has marked out. Let's actually try to assess what's happening here. Mr. Bandyopadhyay, first, for clarification to all our viewers out there, what does the SEBI warning imply on? What kind of platforms should one be wary of which are dealing in digital or e-gold? Because there is a lot of uptick in gold ETF purchases via mutual funds. Is that still a safe space vis-a-vis all the e-gold as alternative to physical gold? How are you helping our viewers to understand where exactly is the problem?
I think the SEBI's this warning is very, very timely. We all know there is an euphoria around gold. The gold prices are moving up. Retail is very keen on investing through the gold, and rightly so. So there is absolutely no problem in that. And asset diversification is definitely needed. Some amount of your money should be in gold. There's no doubt about that. Now the question comes, who are you trusting with your digital gold? When you buy physical gold, you go to a recognized jeweler and buy the gold. That's understandable. But when you are buying digital gold, you have to be definitely careful about what form you are buying. As you rightly said, mutual fund ETFs, which provide digital gold in a form, is definitely well regulated by SEBI and can be trusted. There is absolutely no problem. The government of India comes out with gold bonds, and I think that's a very, very good way of investing in gold as and when and if they come up with these kind of gold bond issuance. Apart from that, I think there are multiple unregulated digital gold service providers. Now, there you have to be extremely, extremely careful, because these, as SEBI rightly saying, these are not regulated entities, and the credit worthiness, trustability of these schemes and these gold, digital gold, stock is absolutely questionable. So investors will do well to avoid, these kind of service providers who are not regulated by anybody. I would rather, people invest through mutual fund route, where there are gold ETFs available, and they can gold silver ETFs. They can do that. They want to be cautious. I think there is multi-asset allocation fund of mutual fund houses which allocates between equity, bond and commodities, that is gold, silver, etc. That can be used. I think there are multiple ways to invest in gold in a structured manner which are regulated, and investors will do well to choose those options rather than going for these unregulated platforms.
If you like the video, do like, comment, share and subscribe.